Ladies and gentlemen, welcome back to the channel. Following Tesla's reversal on Friday to close near the lows of the day, I think we need to discuss what's in store for us in this upcoming week. In this video, we will take a deeper look at whether or not tariffs will be inflationary, if this is something that could negatively impact Tesla and or our markets, and what could a trade war actually look like. Now, as well as that, we will take a look at the massive slate of earnings we have, as well as the big economic data. I mean, we have the jobs report. We have ISM services, ISM manufacturing, inflation expectations, a bunch of Fed speakers next week, and more. With that said, I will also share where I think Tesla and markets are going next. And while it's highly uncertain because of, do we have a trade war? Is this all we're going to get from tariffs? I'll tell you right now from the onset of this video, if all we get is 25% tariffs on Canada, 25% tariff on Mexico, 10% on China, maybe Canada retaliates a little bit, and then we don't do anything, that's bullish. Okay, if this spirals into a larger issue, if China starts talking about putting tariffs on the US and Mexico does as well, then that's a bigger issue. So we'll discuss that throughout this video. Ladies and gentlemen, let's go ahead and get started. Now, the first thing I actually want to start with is this clip from CNBC. It's about 5 minutes long, so if you don't care to watch this, skip past it. But I think you all should listen to this. From the former NEC chief economist on why he thinks the Trump tariffs won't hurt the economy. Now, he talks a lot about inflation, that tariffs are not inflationary. And when I say that, everyone says, oh my gosh, you have no idea what you're talking about, blah, blah, blah. When in fact, tariffs are not inflationary. Okay? What causes inflation? Just if there's one thing out there, if you had one answer for this, what would you say? If you said anything else besides monetary printing of money, you're false. Printing money, increasing the money supply is what causes inflation, nothing else. So if you see tariffs with no additional money supply created, as this individual explains, that's actually deflationary. Believe that or not. So take a listen to this.
Trump says the U.S. is moving forward with a 25% tariff on goods from Canada and Mexico starting tomorrow. China is set to get hit with 10% tariffs. Joining us now is Joe Lavorgna. He's the chief economist at SMBC Nikko Securities America, and he's a former chief economist at the National Economic Council during the first Trump administration. Joe, happy Friday.
Happy Friday.
We got the president talking right now about these tariffs. We also had Phil Gramm and Larry Summers, not normally op-ed fellows, in the Journal this morning talking about the dangers of tariffs as a general tool for economic policy. Why are you so convinced they're not inflationary if we're not exactly sure what they're going to look like yet?
Because, John, inflation is always and everywhere a monetary phenomenon. And if you don't get expansive money and credit creation, you can't have inflation. So a tariff is a price level adjustment. And the problem I had with today's piece in the Journal, it highlighted Smoot-Hawley. The environment was completely different then. The U.S. had been running 1 to 2%, 3% trade surpluses as a share of GDP. So by implementing tariffs, it was a self-inflicted wound. Today, it's the exact opposite. We're running 4% budget trade deficits as a share of GDP. So the environment is completely different.
Well, when most, I think, folks in the U.S., consumers, think about inflation, they think about prices being higher. President Trump did just say tariff costs are sometimes passed along to consumers. So, money supply aside, if prices go up for consumers as a result of this, is that a problem?
Here's the thing, John. What happens is the tariff is being used in conjunction with a lot of the other pillars to the Trump economic plan. So the tariff is an incentive to keep U.S. production here, at the same time to relocate production outside into the U.S. And the reason, other than the tariff being the initial incentive, is low and cheap energy costs, deregulation, and lower corporate tax rates on production from 21% to 15%. The tariffs will raise revenue. That will allow us to keep marginal tax rates lower. So the net effect on U.S. Households should be positive, not negative.
I want to get into the oil and gas tariff piece of this specifically, because we also know since January 20th, President Trump has unleashed a wave of executive orders tied to reigniting energy production in this country, looking at things like pipelines and infrastructure, and basically, to your point, trying to drive inflation lower by making energy more accessible and more affordable. When you slap tariffs on other countries that import a lot of oil to us, what does that do, especially given the fact that I would imagine there are going to be geopolitical implications to this, too, which are not necessarily negative? Yes.
I mean, look, if you look at the economy, energy is about 13% of GDP. Imports are 11%. But the thing with energy is that you've got a lot of indirect effects. So if energy prices go from 75-ish a barrel down into the mid to high 50s, as they were under President Trump's first term, you'll lose at least, I calculate, at least half a point on your headline inflation rate. You lose another 80 basis points from all the indirect effects that lower energy costs have in terms of production, distribution of goods, services, airfares, all those sorts of things will come down dramatically. Because the U.S. is the consumer of last resort, the U.S. is in a much stronger negotiating standpoint vis-a-vis our other trading partners. And with respect to China, whom we have the largest deficit with, the U.S. economy is very strong. The Chinese economy is very weak. It's a totally different situation from 8 years ago. Look at the Chinese bond market. They're telling you growth is significantly weakening. It's much softer than the official figures show. So again, when we look at tariffs, they got to be looked at holistically. They have to be looked at as a negotiation tool. They have to be looked at as a source for revenue. And to me, when it's approached that way, and not just narrowly focused, which so many economists are focusing on, looking at that narrow sliver, in totality, they make a lot of sense.
How are you factoring in changes to population and to workforce? Because we are starting to see the immigration crackdowns on illegal immigration this week, sweeps in major cities and places across the country. You also have economists who are saying this, too, is going to be inflationary.
Well, I mean, again, people kind of forgot the lessons from Milton Friedman. Again, money supply and credit growth are what cause inflation. That's what happened during the last 4 years. We had a massive increase, historic increase in government spending, and then the Fed monetized it. With respect to immigration, labor force participation is slowing. The BLS reported that they've overstated employment by 800,000 workers. So this notion somehow that we're going to run out of workers through immigration is just complete pie in the sky. It doesn't make any sense.
So I just want to highlight and really make this distinct here. I am not saying tariffs are good. I'm not saying that's a positive. What I am saying is tariffs being this big bad boogeyman for markets won't last. Sooner or later, markets are going to realize tariffs are really not going to change much. Okay. Now, if there's a trade war, if we continue this tit for tat, tariff war with Canada and Mexico, that's not good. If it extends into China, that's really not good. I think he made a great point that the Chinese economy is really not in a place to go through a trade war. Then that would be a larger issue. But from where it stands now, like the S&P was up almost 1% on Friday. And then this tariff news came out and we fell 1% negative. This was a 2% round trip move from the highs to the lows today, to where yesterday, from where the S&P started and the high it hit to the low to where we closed. 2%. Tariffs are seen as a boogeyman to markets. I don't think it's nearly as bad as people expect. And inflation, well, it's money supply growing. If the money supply is not growing as fast anymore, that in and of itself is disinflationary. If tariffs actually take less money out of supply and governments are spending less, then that could actually be deflationary as well. And one point that I want to highlight that I think a lot of people are failing to forget right now is consumers are unwilling to pay higher prices. if you cannot pass that cost on to consumers, then I mean that's it. You can't pass it on. You're going to have to take it in the margin, which is not exactly great for corporate earnings. But what, again, that will do is it will highly incentivize companies to build in the US. So again, my point here being, I don't think 3 or 6 months from now, we're going to look at tariffs as this big bad boogeyman. Really, no matter what happens here over the next, couple of weeks, I think it is a buying opportunity. Now let's get into all of the earnings for this week and the economic data for this week. And then we will talk about Tesla specifically. Now also next week, we have a ton of earnings. Like next week is the big week for earnings season. Last week was huge as well with just some of your big tech names. But the sheer quantity of stocks we are going to be getting this week and the following week is massive. On Monday, you have Tyson, some other names pre-market. In after hours, you have Palantir, NXP, Fabrient, and Rambus. Tuesday pre-market, you have PayPal, Spotify, Pfizer, Regeneron, PepsiCo, Ferrari, Merck, Estee Lauder, Apollo, and Enterprise Products. Tuesday and after hours, you have AMD, Alphabet, Snapchat, Chipotle, Enphase, Amgen, Electric Arts, Lumen, and Juniper. Wednesday pre-market, you have Uber, Disney, Novo Nordisk, Toyota, Boston Scientific, and Aora. Wednesday and after hours, Ford, Qualcomm, ARM, Symbotic, Viking, O'Reilly Auto Parts, and Aflac. Thursday, you have Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey's, Bristol Myers, Tapestry, Yum, and Philip Morris in the morning. In after hours, you have Amazon, Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest, MPS, Victory Capital, and Powell. And then Friday, you have Canopy Growth, Flowers Foods, Fortive, CBOE, and a couple of other names in pre-market. So this is a massive week, again, for big tech. For a lot of your more AI names as well, Cloudflare, Palantir, AMD, right? Some importance there, as well as really the sectors are really broadening out this week. You're getting anything from food to energy to fintech to AI to big tech and commerce this week. We're going to have a great understanding of where the economy is, where earnings are, projections for this year, and really Q1 of any year is important because you get guidance, right? Technically, it's Q4 earnings that we're getting right now, but we're in Q1, and the guidance that we get from these companies for this year is going to be what drives these stocks higher or lower, and really what drives markets higher or lower, as long as nothing gets worse with the trade war situation. Now, we also have a lot of economic data as well coming next week. Starting off on Monday, you have ISM manufacturing PMIs. Manufacturing's been in a recession for a long time, so I don't know how much this is going to move markets. We will see. You also get construction spending, ISM manufacturing new orders, prices paid, employment, and other smaller data sets there. You have a speech from Fed Bowman, or Fed Bostic. We really want to see if the Fed is aligning with Powell, if the Fed is, dovish, or if they're more on the hawkish side. We heard from Austin Goolsbee on Friday, and he sounded very optimistic, especially on inflation, that inflation is making progress, while tariffs, if it's a one-time thing, would not need to be reacted to by the Fed. But essentially, if there is a trade war, then the Fed may have to respond to that. Okay. We want to see what other Fed officials have to say as well. On Tuesday, we're going to have JOLTS job openings. Think about it like this. The more job openings we have, the stronger the labor market. Okay. The lower the job openings, the weaker. If you are a business and you're looking to hire 5 employees, you're probably doing pretty good, right? If you're only looking to now hire 2 employees, you're probably not doing as good. And if you're not looking to hire any employees, well, you may still be doing okay, but you're not busy enough to need to hire more people. Okay, that's the best way to think about it. You have factory orders month over month, expecting a negative 1% number there. Not a great number expected. The TIPP Economic Optimism Index will also be coming out, expecting things to get a little bit better than last month. Last month at 51.9, we're expecting 52.3. So that could also be important. And then Fed Bostic speaks again, as well as Fed Daily at about 2 p.m. for daily, and Fed Bostic at about 11 a.m. On Tuesday. At 7:30 p.m. as well, a late night speech we will get from Fed Jefferson. So a couple Fed speakers on Tuesday. On Wednesday, we will get the ADP employment change, actually expecting a number of about 120,000, which is roughly in line with last month's number of 122,000. We will get exports and imports and the balance of trade, expecting the deficit to actually narrow a little bit to 87 billion. Well, I guess that would actually be growing from last month's number of a negative 78.2 billion, expecting that to go up a little bit. For a second there, it looked like it was actually going to be falling. And that'll be important for GDP. Exports, imports, and balance of trade will give you a new GDP Now update from the Atlanta Fed, which is currently sitting at a forecasted GDP of, let's see, about 2.9% as of January 31st. That was the last update that we got. But the average blue chip consensus from forecasters is about 2.1% GDP. So I think that could actually move quite a bit this week. Beyond that, on Wednesday, we get ISM services PMIs. This is most important because 70-80% of our economy is services, 20-ish% is manufacturing. So if services come in weak, then that's more impactful than if manufacturing comes in weak. And you're actually expecting the headline number will go up from 54.1 to 54.3. Anything below 50 is contraction, above 50 is positive. And the higher above 50, the more positive, vice versa. The more you are below 50, the more negative or contractionary it is. ISM services business activity expected to come in roughly in line with last month's number of 58.1. Employment expected to actually fall from 41 or 51.4 to 51.3. New orders expected to fall as well from 54.2 to 54.1. And services prices expected to actually rise from 64.4 to 64.8. You want to see that prices component really come down. That's going to be where the positive or negative move comes from on Wednesday. Is if prices come down, then Wall Street's going to say, well, that's really good. If 80% of our economy is services and prices appear to be coming down, that's great news for inflation. So that's a big catalyst to watch for on Wednesday. As well as that, at 1 p.m., you will get a speech from Fed Austin Goolsbee. At 3 p.m., Fed Bowman will be speaking. And then 7:30 p.m. on Wednesday, Fed Jefferson will speak. On Thursday, you will get the Bank of England interest rate decision. They're expected to actually cut rates, with some people thinking they could cut rates a little bit more than a quarter percent. Challenger job cuts are expected at 45,000. That will be coming out at 7:30 in the morning. Initial jobless claims are expected at 214,000 from last week's 207,000 number. So really good initial jobless claims we're expecting. Continuing jobless claims expected to pretty much come in line with the previous number that we got from last week. You will get Fed Waller that speaks at 12:30 and Fed Daily that speaks at 3:30 on Thursday. Friday is going to be your big data. You do get non-farm payrolls expecting 170,000 from last month's number of 256,000. So, we're back in that market where, at least with the labor market, good news is bad news is good news for now. Okay, so if we get a weak non-farm payrolls number, that could be a positive for markets. A high number could be negative for markets. So keep that in mind. The unemployment rate is also going to be coming out, expecting that to remain steady at about 4.1%. Average hourly earnings expected at 0.3%, the same as last month. And year-over-year average hourly earnings expected at 3.8%, which would actually be down from 3.9% last month. Participation rate, private payrolls, manufacturing payrolls, government payrolls. A lot of secondary data will be coming out there. As well as that, we get the Michigan Consumer Sentiment Survey, expecting sentiment to improve a little bit from 71.1 to 71.8. But the more important aspect of this is inflation expectations. 5-year inflation expectations last month were at 3.2%. We're expecting that's going to go up to 3.3%. That's not terrible, but it's not good. You want to see that number come down. And 1-year inflation expectations are expected to rise as well from 3.3% to 3.4%. So, a big week this week as far as economic data. And again, as far as earnings. I mean, there's going to be a lot to digest this week. Now, again, I just want to highlight Tesla looks pretty good from the charts perspective. It's still in an uptrend. It's still making a series of higher lows. On Friday, things looked really good before the tariff news. It looked like Tesla was going to break out above this declining trend line. Anytime that has happened in the past, it has led to a large rally for Tesla. So if we can find a way to shrug off some of this tariff news, if Tesla can start to move higher next week, you could soon be in a larger breakout. Now, I do think 3-6 months from now, as we launch the robotaxi, as we start producing more Optimus bots, as cheaper Teslas start to launch, Tesla stock will benefit from that. Tesla stock will be moving higher, I believe, in the next couple of months. Now, do we go into a trade war or not? I think that's the bigger issue. I'm not super concerned about earnings season. So far, it looks good. I have no reason to think the earnings picture is collapsing anytime soon. And I think the economic data is a big wild card for this week. Again, if the economy's strong, if the labor market's strong, markets may not look favorably at that. But, tariffs could weaken that picture a little bit. I actually don't think tariffs are going to be inflationary. I actually think tariffs could slow down the economy, though. That's the issue that I think a lot of Wall Street is not considering. That could actually force the Fed to lower rates, right? That could mean, at least maybe in the short term, good economic data could be seen as good news for markets as long as inflation continues to come down. So for Tesla specifically, I'm very optimistic. I don't think this is the year you want to be bearish on Tesla, to be shorting Tesla when Tesla is doing all of these incredible things this year. I just don't think that makes a whole lot of sense. Okay, in the short term, anything can happen. Again, a larger trade war is going to be seen as negative for markets, and it wouldn't surprise me if markets do move lower based on a trade war or fears of a trade war. But I do think that is a very buyable opportunity, especially if Tesla sells off from here. You're already down from your all-time high of $488, now down to about $400 again. Just to get back to new all-time highs, that's almost a 20% move. If you fall further from here, I think you really want to take advantage of that as an opportunity. And I still think Tesla is going to be a $900 stock by the end of this year. Could I be wrong? Of course. That sounded crazy to people, especially back in April, May, when Tesla was $130 per share. And I was saying Tesla would go back to new all-time highs by the end of this year, or by the end of 2024. Do you know how much hate I got for that? When Tesla was $140 stock, and I was saying Tesla would close the year over $400 per share. Do you know how much people hated that? Like, it was not very well received. What happened? Tesla stock tripled. Ended up closing the year at around $488 per share. From those videos I was making in April of 2024 to the end of the year, Tesla rallied 255%. We were right here on this channel. And especially during those dark moments, if you considered for the, even considered that we could be right, that Tesla would start to do better, and you acted on that, you made a lot of money. Now, is this the time to go all in, take every last dollar and buy at $402? No. I mean, I think you can afford to kind of sit back and let things shake out a little bit to see if Tesla does fall, especially if you already have a large position. But if you're not allocated to Tesla and you want to own Tesla and you don't want to miss out on the massive growth opportunities that Tesla is pursuing, like Robotaxi and Optimus, I don't think this is too outrageous of a price, okay? Again, I think Tesla's going to be a $900 stock by the end of this year. But if Tesla does fall, if markets do fall, and let's say Tesla's a $300 stock in the next couple of weeks, I think you want to really take advantage of that, because then I think Tesla's set up for another 300% move by the end of this year. Just my opinions, though. Again, I'm not a financial advisor. I'm not a financial planner. You can lose all of your money if you listen to one person's opinion. Take in this information, come to your own conclusions. But, $402 per share, I think the stock should be higher. I like this stock. And I like the stock at current levels. And I really think just the whole tariff thing is really overblown as far as being this big bad boogeyman for markets. I don't think it's going to be nearly as bad as Wall Street thinks it will be. So let me know what you guys think about this down below in the comment section. Let me know your thoughts on next week, if you think it's going to be a good week or a bad week. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.